In the last few days, we have gotten a ton of very exciting news around the stock market as super investors have released their 13F filings, and we have gotten insight into the moves that they are making. And one move that especially affects my portfolio is Warren Buffett's buy into United Health Group. However, Warren Buffett is not the only super investor buying into United Health. We also have seen the likes of the big short investor Michael Burry as well as David Tepper buying into the company. And when this news was released, UNH stock moved up by almost 14% in a single trading day. The sad thing is, time travel has not yet been invented. So we cannot go back to Monday and invest 50K into calls at the $300 strike and come out with $3.75 million like this X user posted after the announcement. However, what we can do is we can look at UNH, we can evaluate how much upside is still left in the company and what other opportunities are out there in the market that would fall into similar buys to what these super investors are making currently into UNH. However, before we get into those other opportunities in the market, we need to understand a little bit around what is going on with UNH. Over the last year, this stock is down by almost 50%. And we can see that just back in April, the stock price was sitting at almost $600 per share. However, today it is down to $300 per share, and just a few weeks ago, it went below $240. And really, you need to go back a couple of years because UNH has had a number of different problems over the last few years. One of those being a cyber attack that released millions of patients' data and ultimately cost the company $3 billion in fines. However, this attack is all but in the rearview mirror. What we have seen in the last 6 months that has caused this major drop in UNH's stock price is three key things. We have seen significant changes with their management team. We have seen poor performance from their earnings. And the third thing is we have seen a DOJ case that has potentially civil as well as criminal implications for the company. I've talked about all three of these reasons in a previous video and gone a little bit more in depth. However, to touch on these quick here, what we have seen is UNH has replaced their CEO. They previously had a CEO by the name of Andrew Whitty, and he left the company for personal reasons. This brought up a lot of concerns because around this same time, we started getting speculation that the DOJ was looking into UNH. However, the company immediately replaced him with Stephen Hemsley, and this is an amazing pick for UNH because he was previously the CEO from 2006 to 2017, and even prior to that, he was the COO. And alongside this move, the company announced in July of this year that they would also be replacing the CFO position. John Rex was their previous CFO. He had been at the company since 2012 and been the CFO since 2016. They announced the replacement of him with someone by the name of Wayne DeVite, who has previous health insurance experience. And all of these moves at top level positions in the company adds fuel to the fire around the DOJ's investigations. Currently, the Department of Justice is pursuing criminal and civil investigations into UNH's Medicare billing practices. And along with these external factors weighing down the company, we have also seen them perform poorly compared to their guidance heading into 2025. At the start of the year, they were expecting adjusted net earnings to come in between $29.50 and $30 per share. However, as of just a few weeks ago on July 29th, UNH provided updated guidance for 2025, and they are now expecting their adjusted earnings to come in around $16 per share, which is almost half of what they projected at the start of the year. So it's clear if super investors are buying into UNH heavy right now, They must see these issues being resolved over the course of the next 1 to 2 years. And I would tend to agree with that opinion. I think that the moves that they are making at the CEO and CFO position are going to actually have a good impact on the future results of the company. These are two people who are coming in with previous experience either directly at UNH or at other health insurance providers. So they are familiar with the industry. This could also have a positive impact on the DOJ case because the previous CEO and CFO are no longer with the company. So if criminal charges are pressed, it will likely not have a long-term impact against UNH. The other main factor is their earnings. And likely what will occur in 2026 is a large rate increase. Right now, projections are that rates will increase by around 18%. However, there has been talks that that number could be even higher for certain companies. And if this comes to fruition in 2026, this will have a major impact in United Health Group's overall earnings, especially when it comes to their medical care ratio, which hit a record number in Q2 of 89.4%. So with all of that in mind, let's take a look at the conviction that these investors actually have around UNH. When it comes to Warren Buffett's portfolio with Berkshire Hathaway, they currently have around 41 positions, and the value of the portfolio is around $250 billion. And UNH is a relatively small position. It only makes up around 0.61% of the portfolio for around $1.5 billion. However, something to keep in mind is this may not even be a Warren Buffett move. This is likely a move that Greg Abel has actually made in the portfolio. Warren Buffett earlier this year announced that he would be stepping down as CEO and Greg Abel would be taking over. And the reason that I likely think that this is a Greg Abel position is because Amazon was one of Greg's first positions in Berkshire Hathaway, and it makes up around 0.85% of the portfolio. So UNH making up only 0.61% of the portfolio, this kind of falls into the same dollar value or conviction type of play that Greg Abel would likely make. The second super investor that bought into UNH is Michael Burry. He currently holds 6 positions in his portfolio, and the total value of it is around $56 million. However, this is a little bit deceiving because just a quarter ago, Michael Burry sold out of all of his positions other than Estee Lauder, which this quarter he reduced, and it is currently a $12 million position. UNH, however, is currently making up 11% of his portfolio or $6 million in this position. Michael Burry is a little bit more of a trader. This next investor is a long-term holder of companies, and that is David Tepper. And he actually probably had the most conviction out of any investor in this company because he currently holds 38 positions in the portfolio, and the value of it is around $6.5 billion. And UNH is the number 2 position in his portfolio. It currently makes up almost 12% of the total portfolio, and he invested around $760 million into UNH stock. But what's next for UNH? Because it's moved up almost 20% in the last 5 trading days. Is it too late for us as investors to actually get into this company, or is there still opportunity left for this stock? The single most important thing for a company going up over time is going to be their earnings. How much is the company actually bringing in, and what does that growth look like in the future? Right now, analysts have very low expectations for UNH. For 2025, they are only expecting the company to put up $16.24. That is down significantly from a year ago when they put up $27.66. And honestly, for 2026 projections, analysts right now have extremely low numbers in in my opinion. They are only expecting UNH to put up $19.25. If you take these earnings projections at face value, that puts their forward PE ratio at currently around a 15.87. If we assume that UNH should be trading anywhere between a 15 to a 20 forward PE ratio, that would put their stock price around $350 per share. That would be only around a 13% return from the current share price of around $305 per share. However, even on the high side of a 20 forward PE ratio, that would only result in $385 per share or a 26% return. However, for a super investor to get into a stock, they are not going to be looking for 10 to 20% returns. They are going to be looking at least at 50 to maybe even 100% returns for them to consider adding a stock to their portfolio. And that is what I believe they are seeing with UNH right now, because what they're likely projecting for 2026 is earnings anywhere between $22.50 to maybe even $28.50 per share. My personal earnings expectation for 2026 is around $25.50 per share. At an 18 forward PE ratio, that would result in a stock price of $459 or around a 50% return. If we consider them outperforming in terms of their earnings and still only having a forward PE ratio of an 18, that would result in a stock price of $513 per share, which would be almost a 70% return from the current share price. And it's very likely that a lot of these investors bought into UNH around the current stock price, because these reports are only through June 30th. That means that during this time period, UNH was trading relatively around this $300 mark. So in my opinion, there is still plenty of opportunity left with UNH if you were to buy around the current stock price. However, if you don't want to buy into UNH and you want to look at some other companies, the healthcare industry as a whole has taken a beating, and we haven't seen these other healthcare related stocks recover significantly either. One of those being Elevance Health. Overall, it only moved up around 5% after the announcement that these super investors were looking into the healthcare industry. And this company is one that has also been beaten down significantly. Over the last year, it is down by almost 45% from a high of around $550 per share. And Elevance is facing the same issues that the rest of the healthcare industry is running into. They ended up revising down their adjusted EPS guidance for 2025, and the CEO commented that we are updating our outlook to reflect elevated medical cost trends in ACA and slower rate alignment in Medicaid. Another option you could look into is a company called Oscar Health. Oscar Health in the last year is down only 16%. However, this is a company that, in my opinion, has a lot of potential upside. They only rebounded around 6.5% after, again, the announcement that these super investors were buying into the healthcare industry. And the reason Oscar is so interesting, in my opinion, is because they are a growth company in an industry that is getting beaten down. We have seen their revenue increase by around 30% year over year, as well as them continue to grow their member count consistently by large numbers. And what they are running into is, again, this medical loss ratio that is driving down their earnings. In 2024, they had a medical loss ratio of 79%. That has since increased to 91% in 2025. So if they get this corrected in 2026, we could see a huge move up in Oscar's stock price as they return to profitability, as well as compound their profitability as they have continued to increase their revenue and increase their member counts throughout 2025. And another way you could look to capitalize on this trend of investing into the healthcare industry is through a company called Novo Nordisk. They are the creator of Wegovy, really the only direct competitor to Ozempic. And over the course of the last year, they are down by over 60%. You actually have to go back to before Wegovy really hit the market to get to similar stock prices to where they are trading at today. And ultimately, the reason that Novo Nordisk is down so significantly over the course of the last year is because of slower expected growth in this market. There have been high expectations that Wegovy would have a huge impact on Novo Nordisk's top and bottom line numbers. And overall, there's been a lot of slowing in 2025 as some insurers have actually pulled back on their coverage of these weight loss drugs. I do want to make sure that I am fully transparent with you guys. Right now, I do hold positions in United Health Group as well as Oscar Health. I've held these for a number of months because I do believe that both of these companies over the next couple of years are going to capitalize on a reversal of this trend in healthcare. This is the YouTube portfolio, and right now it is sitting at a total value of around $74,000. And right now in this portfolio, UNH is my fourth largest position, with Oscar being my eighth largest position. And UNH has a market value right now of around $6,700, and I am up about 5%. Oscar Health has a market value of $3,500, and I am up around 12%. So do keep that in mind that I am bullish overall on UNH as well as the healthcare industry as a whole over the next few years. But I'd love to hear your opinion down in the comment section. Let me know, what is your price target for UNH and what other healthcare companies are you looking into? I'd love to hear your thoughts down below, and while you're down there, drop a like on the video and subscribe for more videos like this one. And of course, as always, have a wonderful rest of your day.